Some of you have a goal to learn how to invest in real estate in 2022, but as a beginner, you just don't know where to start. So you may be spending hours watching YouTube videos, reading blogs, listening to podcasts, reaching out to friends, and all of that, and you're asking, okay, what's the best way to get my first rental property? Oh, getting started in real estate is easy. All you have to do is get an agent and then find a property in this hot seller's market, but make sure that property is in the right location. Calculate the valuations and your returns. Make sure you get a loan and understand all the financial terms. Then be prepared to negotiate, get the property inspected, but make sure you watch them do the inspection. Then get a tenant, but make sure you get the right tenant. Okay, so getting started may seem easy, but the truth is sometimes it's not. But listen, you don't have to go out and find a distressed property to renovate, or you don't have to spend hours and hours looking at Zillow or talking to an agent to find a good deal that you can flip. And you especially don't have to deal with tenants, toilets, and trash, because in this video, I'm gonna show you an easier way, okay? We're gonna talk about why to invest in real estate, how to literally invest in rental properties right now, like after you watch this video, and I'll do a walkthrough of one of my investing portfolios. So if all that sounds good to you, then make sure you like this video while the intro plays. Hey there, welcome to our channel. I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. All right, let's go ahead and get started with number one, why invest in real estate? So real estate is the biggest asset class in the world, and it's often considered to be one of the safest yet powerful investments there is. And owning a rental property investment isn't as risky as running a successful business. And that's because the real estate industry hasn't changed very much for hundreds, if not thousands of years, right? Like everyone needs a place to live, and people prefer to live in places where there are great resources available. So the business model behind buying rental properties is proven. So many successful real estate investors teach people how to find a great location with good migration and good jobs, get good debt, find great tenants, and then repeat the cycle again and again. But here's the thing, okay? Many real estate experts won't tell you that this process takes a lot of time, especially if you are a beginner. I mean, it can literally take you years to master real estate, because there are all sorts of things that you need to know, like what kind of lease agreements you need and what laws you must abide to, and how to qualify tenants, and making sure you're getting the right insurance for the properties, and sometimes even learning how to complete maintenance requests. And here's another thing, okay? Many people who teach real estate investing make money by teaching you how to do it yourself. So for years, I was so focused on building my businesses that I was always intimidated by the amount of time it would take for me to actually learn and master real estate investing. And because of this, I missed out on many gains, bro. But there is an easier way, and let's go ahead and talk about it with number two, how to invest in real estate right now. Literally. So instead of managing properties yourself, you can partner with other people who manage the properties for you. And I'm not talking about hiring a property manager. Okay, there are generally two ways to go about doing this, and I do both. Okay, number one, you can invest in a REIT, or a real estate investment trust. So a REIT is a company that owns, operates, and finances income generating real estate. Modeled after mutual funds, REITs pull together capital of numerous investors, and this makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. And because of that, in my humble opinion, I believe REITs are a great option for beginners who want to invest in rental properties right now. The REIT that I invest in is called Fundrise, which I'll walk you through my portfolio in just a bit. And I love Fundrise because it gives you so much detailed information about your investments. Okay, you can see where your properties are located, whether it is a single or multi-family rental, how much was invested or how much the property was acquired for, what are the projected returns, and they give you daily and quarterly reports. And when you actually go out and make an investment into anything, it gives you a stake, and it really motivates you to learn, okay, what's going on with my money? Now I have an affiliate affiliate link to Fundrise, which is in the description below, which saves us both on fees when you sign up. Now, the second way to invest in real estate right now is number 2, you can invest in deals as a limited partner, usually if you are an accredited investor, which, by the way, being an accredited investor means you have a net worth of at least $1 million or you generate $250,000 in income every year. Now, this option is also extremely attractive, especially if you are an established entrepreneur or investor, because you actually own a percentage of your investment. So your income and losses are taxed as passive income. Whereas with REITs, it's more like you have a share or a stock in a company, and those are taxed as capital gains. Which, by the way, I have a great video breaking down capital gains taxes. So if you haven't seen it yet, I'll put a link in the description below so you can watch that after you finish this video. Now, I have a few accredited investments, but my most popular ones are probably investments with Open Door Capital, which is a company by Brandon Turner and former host of the Bigger Pockets podcast, which I think is kind of interesting because he used to interview real estate experts who taught, in my opinion, how to invest in real estate the hard way, or you're doing it yourself. And now he runs a company that shows people how to invest in real estate passively or the easy way. But anyway, his fund helps people to invest in mobile home parks. And then my other popular accredited investment is with Cardone Capital, which is ran by Grant Cardone, another popular social media influencer. But listen, okay, everything isn't all roses and sunshine when it comes to REITs and accredited investments, which brings me to number 3, the major cons of REITs. So I have 2 big cons that you need to know about, okay? The first big con are taxes. So as I mentioned, REITs give you passive dividend income and are taxed as capital gains. So you don't get the same tax benefits as you would when you are considered an owner of the property, like writing off mortgage interest, property taxes, maintenance costs, tenant replacement costs, and my favorite, depreciation. And that's just to name a few tax write-offs. Now, I have a great video breaking down my top tax deductions for rental properties, which I'll link below, and you can watch that after you finish this video. So in order to leverage more favorable tax strategies, you need to become a part owner by either managing the property yourself or partnering with someone who is managing the property, usually as an accredited investor. So the second big con are returns. And I wouldn't be surprised if some people already cut off this video because of this, okay? Here's the thing. I pay what is called an asset management fee on my accredited investments or an advisor fee on my REITs, which is usually around 3%. And these fees help companies to actually find and manage the rental properties. But because I have to pay these fees, it theoretically lowers my potential returns. But I'm okay with paying these fees because it allows me to spend more time on building my businesses, which gives me a greater return. Also, returns may be lower because REITs or your partners may not always pick the best deal with the highest returns, right? Like maybe they see a deal that generates 6% cash on cash returns, which is good for the fund, but you want a 12% cash on cash return. So it's easy to look at funds with a little bit more scrutiny and think to yourself, okay, I can get a better return than that. But remember, if you are a beginner and you want to learn, then it's still a good idea to start with REITs, in my opinion, because you can learn, you have a stake in the property, and it gives you an idea of how real estate investing works. And once you really understand and learn, then you can go out and partner with someone else or manage your own property. Okay, I'm gonna take a few seconds and walk through number 5, my Fundrise portfolio. So I have an affiliate link in the description where you can sign up and download the app. So let's go ahead and open the app. Awesome, so I'm on my phone now and I'm gonna take about 60 or so seconds to walk you through my Fundrise portfolio. Now, as always, this is not financial advice and I'm not telling you what to do, I'm just telling you what I do. All right, so when you first open the app, you're gonna see the home page. Now, usually when you first log in, you're gonna see exactly how much money you made since your last login. But since I've already logged in for today, it's not going to show me that. But your home screen pretty much gives you a summary of your account, pretty much what any typical home page would do. Next, we have the performance tab. So this is where I spend the most time, right? So on the performance tab, it will show you your net cash in or your net cash out, as well as your net return. So we can see that I've invested about $130,000 into Fundrise, and my net returns have been about $33,000, which is over 20% and a really, really healthy return. If we scroll down, we can see my portfolio returns on a percentage basis. So we can see my weighted average annual return on Fundrise was 25.9%. But I also want to point you to the Growth REIT Fund, which has given me a 42.4% return, which is outrageous to me, right? Because it's basically saying that I've made almost 50% of my money back in 1 year, which was 2021. Now, of course, these returns may not continue. We saw a huge explosion in the housing market in 2020 and 2021. So these returns may not continue in 2020 or 2023, especially as the Fed looks to raise interest rates, but nonetheless, really good performance. Next, we have positions, okay? So this is pretty much gonna give me a portfolio allocation of my investments in Fundrise. Next, we have the projects tab. So this tab is really cool because it's gonna show you how many projects you've invested in and give you a quick summary of those projects, right? So as you can see, I've invested into 187 projects, and the projects vary greatly. You can see I've invested into some commercial stuff, some townhomes, some just all kinds of things, some apartments, single family rental properties. So let's look at this one. So this single family rental property is located in Humble, Texas. There are 163 homes in the fund. They've invested about $43 million, and their strategy is a core plus strategy. And their equity to debt ratio, it looks like it's all equity. So they own these homes outright and clear. There's no debt on the books. So it's all free cash flow, which is awesome. All right, next we have the news feed, which is where new investors who want to learn about real estate can really start digging into the minds of experienced investors. And remember, you have a stake, you have money invested. So it gives you motivation and that extra oomph to actually figure out what's going on with your money. So if we scroll through, you can see all the project updates, right? So if I just click on, let's look at rental home development in Houston, Texas. All right, so it's gonna show me exactly, okay, they're giving me a summary of what's happening. They said they've invested roughly $11.5 million into the property. It's telling me the strategy they're deploying. It's telling me their overall business plan with the property. It's telling me exactly why they invested, which is really important if you're a new investor to understand why people are investing where they're investing, and a lot more. So this gives you a door to really open and see what other experienced real estate professionals and funds are doing. And lastly, my favorite thing is the reports and updates that Fundrise give you. So here I have open a year-end letter for 2021, and I won't go through the whole letter, but if I just scroll through, you can see that there is just so much information that they're giving you and so much that you can learn from their whole company about how they're investing into real estate. All right, and that's how you can invest in real estate right now as a beginner. Now, of course, you should still strive to learn as much as you possibly can, whether you're investing in a REIT, whether you're partnering with others, or whether you're just managing things yourself, okay? Just don't get overwhelmed with all the information and let that stop you from getting started investing into rental properties. All right, we have 2 more videos coming up next. One walks you through how to buy rental properties with an LLC, and another walks you through my top tax deductions for real estate, and I'll see you over there.